Are you struggling to understand stock market indices and their impact on your investment decisions? Let's dive into the world of Indian stock market indices and unravel their significance. If you enjoy this video, want to see more, subscribe to my channel and press like button. Stock market indices are powerful tools that provide a snapshot of the overall market performance. In India, two major indices dominate the landscape, the Sensex and the Nifty 50. The Sensex, short for Sensitive Index, is the oldest and most widely recognized benchmark of the Indian stock market. It comprises 30 of the largest and most actively traded stocks on the Bombay Stock Exchange, BSE. On the other hand, the Nifty 50 represents the top 50 companies listed on the National Stock Exchange, NSE. These indices serve as barometers for the health of the Indian economy and stock market. When you hear news about the market going up or down, it's often referring to the movement of these indices. They reflect the collective performance of their constituent stocks, giving investors a quick gauge of market sentiment. But why are these indices so important? For starters, they provide a benchmark against which fund managers and individual investors can measure their portfolio performance. If your investments are outperforming the index, you're doing well. If not, it might be time to reassess your strategy. Moreover, indices form the basis for many financial products, such as index funds and exchange-traded funds, ETFs. These investment vehicles aim to replicate the performance of a specific index, offering investors a simple way to gain exposure to a broad market segment. Let's take a closer look at how these indices are calculated. The Sensex and Nifty 50 are both market capitalization-weighted indices. This means that companies with larger market capitalizations have a greater influence on the index's movement. For example, if a large company's stock price increases significantly, it will have a more substantial impact on the index than a smaller company's price movement. It's important to note that the composition of these indices is not static. They are periodically reviewed and rebalanced to ensure they continue to represent the most significant companies in the market. Stocks may be added or removed based on factors such as market capitalization, liquidity, and sector representation. While the Sensex and Nifty 50 are the most well-known, India has several other indices catering to different market segments. For instance, the BSE Midcap and Nifty Midcap 100 focus on medium-sized companies, while the BSE Smallcap and Nifty Smallcap 100 represent smaller enterprises. There are also sector-specific indices, like the Nifty Bank, which tracks the performance of banking stocks. Understanding these indices can help you make more informed investment decisions. For example, if you believe that small-cap companies have greater growth potential, you might choose to invest in a fund tracking the BSE Small-Cap Index. Alternatively, if you're bullish on the banking sector, you could consider investments aligned with the Nifty Bank Index. It's crucial to remember that while indices provide valuable insights, they don't tell the whole story. Individual stocks within an index can perform very differently from the index itself. Therefore, it's essential to conduct thorough research and consider your personal financial goals and risk tolerance when making investment decisions. Another important aspect to consider is the concept of index investing. This strategy involves buying a fund that mirrors a particular index, allowing you to achieve broad market exposure with relatively low fees. Index funds and ETFs have gained popularity in recent years due to their simplicity and cost-effectiveness. However, index investing is not without its critics. Some argue that it may lead to overvaluation of large-cap stocks and reduced market efficiency. Others contend that active management can potentially outperform indices, especially in less efficient market segments. As you navigate the world of Indian stock market indices, it's essential to stay informed about market trends, economic factors, and regulatory changes that can impact index performance. Regular monitoring of these indices can provide valuable insights into market direction and sentiment, helping you make more timely investment decisions. To enhance your understanding of stock market indices and their role in your investment strategy, consider seeking guidance from financial advisors or participating in investor education programs. These resources can help you develop a more nuanced understanding of market dynamics and how to leverage index information effectively. Ready to take control of your investment journey? Start exploring Indian stock market indices today and unlock the potential to make more informed, strategic investment decisions that align with your financial goals.